You could have lost tens, even hundreds of thousands of dollars just because you didn't know the answers to these questions. Rich people use credit cards to earn profits, rack up free travel points, and build assets. Regular folks use them to buy now and pay forever. The truth is, banks charge you twice as much interest as they charge the rich, and they won't tell you why. In this video, I'm going to reveal 25 questions about credit scores that everyone who wants to build wealth must understand. In just 5 minutes, you'll become a financial expert. If you're thinking about opening a new credit card or already using one, this video is a must-watch to understand how the rich make millions from credit cards. 1. What is a credit score? A credit score measures your financial trustworthiness. It determines whether you can get approved for a mortgage, a car loan, or a new card, and what interest rate you'll get. It's a number, usually from 300 to 850. The higher the score, the easier it is to get approved, with lower interest rates and better deals. 2. What factors affect your credit score the most? FICO scores are based on 5 factors: payment history, 35%, credit utilization, 30%, length of credit history, 15%, credit mix, 10%, new credit inquiries, 10%. 3. What is an ideal credit utilization rate? Below 30%, ideally under 10% of your credit limit. 4. Should you wait until your due date to pay off your credit card? Definitely not. To quickly increase credit scores and lower credit utilization, which accounts for 30% of your FICO score. What is the 15-3 rule? It relates to the timing of credit card payments. Day 15, make a partial payment or full if you can, 15 days before the due date. Day 3, make a second payment 3 days before the due date. The goal is to lower your reported balance when banks report to the 3 major credit bureaus: Equifax, Experian, and TransUnion. Example: your payment due date is the 18th of each month. You split payments like this. Day 3, pay 15 days early. Day 15, pay again 3 days before the due date. The result? The system reports little or no debt, and your credit score improves quickly. Pretty amazing, right? Don't forget to subscribe for more great financial tips. 5. Is it bad to be 1 day late on a payment? You may be charged a fee. If it's over 30 days late, it'll be reported to the credit bureau, and your score will drop. 6. Is it good to pay off your balance every month? Absolutely. It helps you avoid interest charges and improves your credit score. 7. Should you close a credit card you're not using? Don't rush. Closing a card reduces your total credit limit and credit history length, which could lower your score. 8. Does opening many credit cards affect your score? Yes. Each new card causes a slight dip in your score and increases risk if you overspend. 9. Should you max out your credit card? No. Using more than 30% of your limit lowers your score and shows reliance on credit. 10. How long does it take to improve your credit score? Usually 3 to 6 months if you pay on time and steadily reduce debt. With a good FICO score, your credit improves faster. 11. Can you delete old credit history? You can't manually delete it, not even if your mom works at the bank. Negative info disappears after 7 years, bankruptcies after 10 years. 12. Should you check your credit score regularly? Yes, you can check it for free and it won't hurt your score. It also helps you detect errors or fraud. 13. What's a good credit score? 750 plus is excellent, 700 to 749 is good, 650 to 699 is fair, 600 to 649 is poor, below 600 is bad. 14. Why do rich people use credit cards while poor people end up in debt? The rich use cards for rewards, cash back, and building credit, and pay the full balance monthly. The poor use them in emergencies and only pay the minimum, racking up high interest. 15. Should you only pay the minimum payment? No. Paying the minimum leads to high interest charges and long-term debt. 16. Should you use credit cards instead of cash? You can, if you manage spending well. Avoid emotional purchases and always pay the full balance to benefit from rewards. And you need to understand the basics of credit cards. Once you grasp all 24 questions, you won't have to worry anymore. 17. Should you use credit cards to invest? No, that's extremely risky. You're borrowing at high interest for an uncertain return. But in rare cases, if you have a short-term opportunity and can recover your money within 40 days, it might be viable since credit cards offer 45 days interest-free. 18. What credit cards are best for beginners? Secured credit cards require a deposit but easy to get approved. Student cards, designed for low-income students. Some banks offer no annual fee and cashback cards. Start right, and you'll build strong credit. 19. How often should you request a credit limit increase? Every 6 to 12 months if you've maintained good payment history. Banks may increase your limit automatically. If not, request it. You might get 20 to 50% more depending on your credit profile. 20. Is it okay to use multiple credit cards? If you can manage them, yes. It spreads out your expenses, increases your total credit limit, which lowers utilization, and helps in emergencies. It can also help you access capital for business or investments. 21. What if you have no credit history? Start with a secured credit card or become an authorized user on a family member's card. 22. How can you pay off credit card debt faster? Pay more than the minimum. Use the avalanche method, pay highest interest first, or snowball method, pay smallest balance first. Transfer balance to a 0% APR card, valid for 12 to 21 months. Always pay on time. History matters. Negotiate with banks to lower interest or extend payments. Consider debt relief programs. Automate payments to avoid late fees. Consider debt consolidation with a lower interest personal loan. 23. What's the bank's real goal with credit cards? To generate massive profits by manipulating consumer psychology. High APR 18 to 29% more than most loan types. Hidden fees, late payments, cash advances, overlimit charges. Encouraging emotional spending. Cards feel easier than cash. Reward programs that mask the real cost. Interest if not paid in full. Their end goal? Turn you from a consumer into a loyal debtor, paying them every month. 24. Mistakes that ruin your credit and bury you in debt, paying only the minimum, using more than 30% of your limit, opening too many cards too fast, missing due dates, taking cash advances. Fact, 60% of Americans only pay the minimum each month and fall into compounding debt. 25. How do rich people profit from credit cards and beat the banks legally? They don't let cards control them. They turn them into profit tools. Always pay in full and on time to enjoy 0% interest grace periods. Use the right cards for cashback, travel points, and rewards. Apply rewards to essential expenses like bills and business trips. Use high credit scores to negotiate better loan rates, save thousands. Use business credit cards to separate expenses and leverage float time. Never spend emotionally, always with purpose. Imagine what credit limits billionaires like Trump, Elon Musk, Warren Buffett, or Bill Gates might have. If you've made even one of these 25 mistakes, leave a comment. When you share, you help others learn and avoid falling into the same traps. And if even one insight from this video helped you, please like, subscribe, and hit the bell so you don't miss the next video where I'll reveal how I make money online and manage my personal finances effectively, starting from zero capital, zero connections, and zero financial knowledge, until I made my first $1 million in just 3 years, from age 22 to 25. Along with that are the right financial mindsets to achieve your financial dreams. Mindsets that cost me hundreds of thousands of dollars to learn, drawn from the painful mistakes I made along the way.